Hi, it's Peter Temple for the market report for, let's see, it'll be February 7th today for the 8th on Monday. Well, let's take a look at the S&P first of all, and then I want to spend a little bit of time on currencies generally to give you an idea of where they're going, because the whole market is moving together, as I've said before, based on international debt and deleveraging. So it's getting a little bit easier, and certainly on Friday it got an awful lot easier for me to be able to project where we're going, because the Nasdaq in the U.S. equities kind of gave away where we are, which is good. It's where I thought we were, but there was a little bit of question as to where we were going next. So what I've got here is the S&P 500 going from November, which was our wave 3 top, if you remember, going for a fifth wave, which was the truncation. This was a larger, what I labeled this as a larger second wave, where we had the first wave down in May of this year to August the 24th. So that's the bigger picture, and I will provide a chart today within the post showing that. I'm also going to show a chart of the projection down, which I believe we're going into a fifth wave. But let's go back to this point here. So we've got this truncated wave, fifth wave here, and then we had what I labeled as a first wave down. I've got the bigger numbers in yellow. First wave down here. This was an ABC wave, but only because it truncated. So you can see that the waves are there, and we kind of fell apart. And so I called this truncation somewhere around this region here. I said, this wave being an ABC has got to be wave 2. And sure enough, that's what it turned out to be. I called that at the top, but I just had no idea how far down it was going. And it looks like this ended up being a wave 3, which came down in 5 waves. I've relabeled this today just because of where we are ending up now in a fourth wave. So we had 1, 2, 3. Again, the truncation kind of crushed this wave here, and we have got a 5 waves down, and this was an ending diagonal. You can sort of see the waves here. You can draw lines across them. So this makes this the previous fourth wave. And we've come up here in this ABC configuration, which seems like it's taken forever, but it really hasn't. If you were to look at the length of our second wave here, you'll see that the fourth wave is just about the same length. It's going to be a little longer by the time it gets up here. But we've got from the bottom, which was the 21st of this past month, our third wave down. We've got this ABC going up, and then we've had on Friday, we had another B wave down confirmed here, and it went right down to the bottom of the previous B wave, and now we've got what looks like a C wave up to the top here, which should turn over at either our previous fourth, which would be about 1950 in the S&P, or it will go up to my measurement here, where if you extrapolate off the B wave here, this is an actual A wave, then this tells me that 1.618 up is about 1961, 62. So you've got a range of about 1950 to 1960. This should turn over in a fifth wave down of the first of the larger third wave that we're in. And this should take us, I believe, down about 300 points. So that will be, I'll warn you when that's coming. We'll look at it together. I think it'll take about another week to get up here. So that gives us a turnover of around the 15th of the month. And this will be a fairly dramatic fifth wave down, I think about 300 points. So that's what I expect to have happen. Let's go look at the Nasdaq, which sort of gave things away on Friday. So here's the Nasdaq, and we're going to take this back hourly chart about the same time frame as the S&P, and you can see we had a wave 3, although it's not labeled here, and then we had a fourth wave and a fifth wave, which actually topped, and this was the truncation on the S&P. So this kind of gave it away that we had truncated here, and this is what I was looking at to say, hey, I think we truncated. So we had this, the problem with this is we had this ABC wave down here too, which I've labeled as wave 1, and so this messed up the Nasdaq first wave down, because this actually isn't a motive wave, and so this made it difficult to figure out actually what was going on, because it's one of those rare truncations. Only at this level in Elliott wave have only happened about 3 times in the last 30 years or so. So it's really one of those things that is very rare, and so there aren't really any rules, and so you have to kind of go by the seat of your pants to figure out what's going on. So I am labeling this as wave one down, second wave up at the top here, and then this third wave down. We had the same ending diagonal here. And so what the Nasdaq did on Friday was it gave away that this is a fourth wave triangle. So the triangle can really only be a fourth wave, and that's what gave it away. And I said, okay, well now the S&P, which could have been in a second wave, although I doubted it, it looked like we were going to go into a fourth wave there too. This wave in the Nasdaq only has to complete the E wave here. So that's the last wave of a triangle, and it will do that in 3 waves, while the S&P is probably going up in 5 waves to complete the fourth wave just a little bit higher. And they will both turn over at the same time and head down into a 5th wave. So this is our little canary in a coal mine, if you want. We watch for this level here, and we'll know when the S&P is going to top, because they should top at the same time. So this makes it a little bit easier looking for this next turnover. So that's the Nasdaq. So let's look very quickly at the big picture of the euro. This is a 2-day chart, and you can see the great big first wave down here, which looks pretty motive to me. And we've got this corrective wave that's been happening for the longest time. It's been a year now, and from the one we've got an A, B, which we've just finished, and we're in what is the C wave right now. And if I measure, which is a typical measurement, the A wave here to be 100%, you'll find that if I move the bottom of this up to the bottom of the B wave, the same length for the C wave would take us to a 38% retrace. And the 1.618 point takes us to just about 62% retrace. So both of these are possible, and I think the most likely is that we're going to get a 38% retrace here because we didn't make it with this A wave. This C wave may take us right to that point, and then we'll head back down again. That's my take on the euro. Now let's take a closer look. Here's the 4-hour chart on the euro. This is getting to be quite the complicated chart, but I'll take you through the bottom of wave 1 down here. We had this ending diagonal. Then we actually had 5 waves up. You can't see it here, but within that there were 5 waves up. This became an ABC corrective wave here. And then we went into this great big triangle, which first of all I thought was a bearish triangle. And in here, when it didn't actually go through the bottom of this triangle, I got neutral again, and it turned into a bullish triangle. So this either could have gone down to the bottom here, which is kind of what I expected, but not to a new low, because that would have changed the count. It would either do that or it was going to head up, and it chose to do a bullish triangle and head up. So we actually went into an AB. This came down to exactly the 62% mark here, and now we're into a great big long C wave, which may go up to 38%. So we'll jump in just a little bit closer on this one. Here's the hourly chart of the euro, and you can see this is the triangle here, B, C, D, E. And then this is where we did not follow through and go to the downside. We turned around here, and this is where I got bullish or neutral in about this point on the triangle, and sure enough it turned bullish. And what we had here was a motive wave up, 1, 2, 3, 4, and 1. Get 1, 2, 3, 4, 5 waves up, and in actual fact this wave up, if we were to measure this, take this wave down here to let's say our first wave there, this wave up, our 5th wave, ends up being 2.618 times the length of the first wave, which is sort of typical for this kind of first wave configuration. So I'm expecting this to be the first wave here, a second wave. We should head up here to 62% in the next couple of days, and then back down here to be a second wave, and then we will head up again in a third wave, and that will be at the same time probably that the equities head down in their 5th wave. So this is going to be where our fourth wave is in the equities, and we should head up in a fifth wave here. Remember, I've been saying for a long time that the euro was actually the inverse of the equities. When the euro heads up, the equities head down, and that's what's been going on for some time now, and I'm expecting that to be the norm for the foreseeable future. Let's go look at US dollar CAD. This is another US currency pair, and this one is a flip chart. Most of the other pairs are the euro, for example, US dollar, the pound, US dollar, Australian dollar, US dollar. This one is flipped, US dollar CAD, so it's kind of upside down to the other currencies, so you have to keep that in account as you're looking at this. But this is a very motive structure, and it took me a little while to figure out in the last few days what was going on here, but I think this is the count, and it also is the same inverse count as the euro. In other words, it's doing the same thing as the euro is, but you have to look at it as a chart that's upside down. So we had and it turned on January the 20th, which is interesting because that was the bottom of the third wave in the equities. So you can see that the markets are turning in an inverse relationship, and it's happening at the same time. So we had 5 waves up here, and it took me, this is a typical sort of first wave configuration, and if we were to measure this, you'll find that if we go to the bottom of this wave here, this ends up being 1.6 the length of this sort of first section of the wave. So this seems to work, and the 62% retracement line is this one here for the next move. So we've got 5 waves up. We've got 1, 2, and we had a big third here, and then 4 retraced to the previous fourth, and a big long fifth wave, which is a typical first wave configuration. Now, what I'm showing here is a retrace, and this was an ABC wave, and in fact this wave overlaps the first wave, and that's one of the ways you can tell, but it looks like ABC. And I'm suggesting that this is the sort of if you can think of what the euro is doing right now, this is going to turn and go up 62%, and then we'll have a long C wave down, which will be our second wave, which is, if you think upside down again, is exactly what the euro is doing. And then we should have a big third wave up here, actually down on this chart, which as the euro goes up, this would be the same configuration, and I would assume that the equities then will do the fifth wave down. So this may take us about a week to do this ABC configuration and then have our long third wave as the equities heads down in a fifth wave. So there's a lot in this report tonight, but of course you can stop and go back and figure this out. I'll put a couple of charts in the post tonight that I think will help understand this, but I see this as being all one market. And if you watch it carefully between currencies and the equities, you can get a good idea of where things are going because they're all moving in tandem. Interesting market, and that's our market for Monday, February the 8th. Good trading.